Federation of Philippine Industry says firms have cautiously resumed purchasing activity, anticipating future output growth. This as stronger domestic demand propped the Philippines Purchasing Managers Index in December, ending a 3-month decline in new orders. In December, PMI went back above the 50 threshold, separating expansion and contraction. It's an improvement from November, when it suffered its steepest drop since August 2021. With us now for more from Singapore is Jingyi Pan, Economics Associate Director, S&P Global Market Intelligence. A very happy New Year to you, Jingyi. Welcome back to the program.
Happy New Year, Kelly. Thanks for having me, and certainly some good news to bring here.
Indeed, and if you speak with the Federation of Philippine Industries, they're going to tell you this isn't a fleeting lift from holiday restocking, but a signal of genuine stabilization. But what do you think?
Well, Kelly, I think it's certainly in November, relating last month when we talk about the November numbers, I think we've already expected some of this rebound, especially given the future output index itself shooting to the highest number seen so far this year, despite the PMI readings, the output readings, and also the headline readings sinking below 50 and showing that kind of steep downturn. We understand that was largely due to the weather disruptions and some of the corruption scandal management. But to some extent right now, what we have seen in December is a recovery in the sense that it's reflecting the true situation in the Philippines manufacturing sector. We have new orders, as you mentioned, returning to expansion at while modest, one of the strongest numbers we have seen in 2025 as well. And that has driven, purchasing, as you mentioned, this Business Federation, they have reported it as well. So in the PMI, we see people starting to buy again, starting to stock up finished goods in anticipation of sales in 2026. And more than that, I think also on the employment side, there was some stabilization after what was one of the more steeper drops in 2025 in terms of the labor numbers. So this is telling us that in December, we're seeing a bit of a broad-based recovery. Certainly, I would say it's not really unique to the Philippines because we see in other Asian economies as well around the region, this kind of uplift has been seen. But certainly for the Philippines, it's a notable recovery given what happened in the prior months to December.
So
and I would say
broad-based recovery, notable in what you're saying, but output is still contracting.
Well, definitely, I think that's a good point to pick up on. We still have output in a reading below 50. But with that being said, that has also risen from November's reading. What we find as the key reason is really just at this point, perhaps new orders hasn't been enough to lift output into expansion again. But I won't be surprised as well that, some of, given the weather disruption, some of the operations in December haven't perhaps, resumed fully. So I think into January, we'll get a better picture of what's happening on the output side of things. But with demand, that's definitely the leading indicator. It is the one that we watch for the next few months output situation, and that number has rebounded. Future output, even though it slipped slightly from November, is still one of the strongest as well we have seen in 2025, reflecting the expectations among manufacturers for production to resume in 2026 in a positive manner. Certainly our forecasting economists, if I may, had also predicted a stronger growth for industrial production in 2026. So that's something that we definitely look forward to for the Philippines manufacturing sector.
And all that positivity is coming from a stronger domestic demand. That lifted December PMI. But how is domestic demand holding up beyond the holiday season?
Well, so our numbers are seasonally adjusted in the sense that this is not perhaps, showing what's happening because of holiday buying. This itself is showing a trend that is, compared to maybe December last year, if I could just use this as a layman example. So in other words, we are seeing the strong rebound happening already in December, despite the holiday effect. What we are seeing going into 2026, well, certainly a lot of the domestic sources are still the ones that we're counting on for demand to come through. External demand is still weak, and I will say again, this is not something unique to the Philippines, as you see other Asian economies also reporting. In fact, global manufacturing reading for goods trade is actually still below 50. So that is something that we look forward to, well, perhaps a recovery in 2026, especially driven by potentially what could be the US. They stocked up a lot in 2025, front loading that's helped Asian economies to some extent. But in 2026, well, we do see the likelihood of, some of these stocks getting used up first, but into the latter half, that inventory rebuilding is expected again. So from that perspective, we are not perhaps, looking to the US being performing badly in 2026, and that could show up some of the demand as well for goods from our Asian economies, including the Philippines.
But really critical to sustaining growth in PMI are exports. That would be key in sustaining the momentum. How are you seeing now the export market conditions? Because they've been pretty dire over the past couple of months.
Definitely. I think 2025 has been one where we entered with expectations that the tariffs, perhaps will not be so bad. Obviously, in April, that hit hard. But certainly, the front-loading impact had actually helped to cushion the fall. And at this point, what we have seen into November, December is that we had a little bit more clarity, a little bit more relief with respect to the tariffs. So going into 2026, I think the expectation is more for the dust to settle. And from that perspective, exports, while still the key uncertainty for the market, hopefully is going to only go in the upward trajectory in terms of recovery. So that's our current expectation. And also, alongside some of the recovery in terms of tourism for the Philippines, better disbursement and reforms, altogether, I think that's going to have the expectation of a stronger growth. Definitely still falling between the weaker target from the Philippines government, around 5 to 6%. So 5.4 is the number we are looking, but that's going to be stronger than the 4.8 we have penciled in for this for 2025. Harry.
Just very quickly, if you were to translate the PMI's forward-looking signals into policy advice, what's that going to be? One measure from the government.
Well, I think definitely to a large extent, it's really the expansion of the manufacturing base. From what we have been seeing, it's that a lot of the strong domestic demand come from, expectations for business expansion plans, growing of the customer bases. And I think these are the kind of things that the government could actually put effort behind to supporting to keep that momentum going on from what we have seen in December. And hopefully that really does materialize, because we see there are plans to do that as well. So that's really part of our basis as well for the stronger 3.2% expectation for industrial production growth in 2026.
All right, so we'll leave it there with more questions and answers, but it's good to keep that optimism. Jingyi Pan of S&P Global Market Intelligence, live from Singapore.